What's up, everybody? We're now into March 2025, and we're just going to go over the NQ price action that occurred over the past 2 days. If you haven't watched my previous video, you'll see the analysis that played out, and yeah, let's go ahead and get into it. So, just a quick review of it without going to the charts. I In the previous video, I said that we had a phase shift. We exited the bearish range that we were in, and we moved into the next phase of the market, was into a run, right? So we're trending now downward. So there's only two phases to the market. Simplified it down, the market's either ranging, meaning it's in a bullish range, or a bearish range, depending on the current direction or current bias of the market. And then we get a run afterwards, and we either break the range in favor of the range identifier, meaning bearish. If we break down, then the bearish range is solidified, or it's validated. And if we break higher, then we start a reversal, and then the bearish range is invalidated, meaning that we are now changing our bias from a bearish bias to a bullish bias, and vice versa, right? But all that to say is there's two phases to the market. You're either ranging or you're running, or if you want to call it the run a different word, you're trending. All right. Then we chose our liquidity targets. We identified those after the range was cleared. So we said, yeah, like what do we do next? Now that we broke the range, what else is there? Well, we choose the previous structural points from the current trend, or from the previous trend, which in this case was a bullish trend, as our targets. And we want to see price action. We choose those as our targets if we're in trades, and we also want to use those as indications or markers for potential reversal points or break of structure to continue our current trend. And I'll go into that here in a minute. But that's the review of that. So, looking at the daily time frame, this is the chart. This is what happened today. Over the past 2 days, which are the black candle and the green candle currently, we took out both of the targets that I called out, which were those two previous liquidity points or structural points. And we are now, it seems that we liquidity grabbed the final point, and we have begun to ascend in the market once again. But we cannot confirm this until we get a little bit more price action that occurs, which we'll have to go down to, say, the micro perspective to look at, or we can wait for more data presented on the daily time frame to assess if we're going to now be in a reversal, or is this just a pullback, right, to mitigate the current green candle that's shown next to the black candle. All right, just realized I wasn't marking anything up. But yeah, that current green candle here, to see if price is just going to come mitigate that and continue trend lower, right? So all that will be seen, and we'll look into that in the outlook. But I didn't take this trade. I was really busy. But this is the opportunity, if you were watching this, and I'll break this down here on the charts in a second, the 9-minute sponsor candle play that caused this very, very, very bearish an easy liquidity run to the downside to clear both of those targets. It was a perfect open of the candle of the SC entry. The green box is notating daily inefficient pricing, which I'll go over that in a second. And then obviously you get the run here. And then if you were looking for more opportunities, you would find them inside of this run. You can see, despite, it was showing on the higher time frame was just black candles going down, but here, if you shift down to the macro perspective, you can find opportunities at every pullback, here, whatever, and whatever entry signal you choose to use to get into the markets, you would have opportunities to get in and go towards those targets that were selected. Right, but I'm going to show you how I found this 9-minute candle before it happened, and how I go about finding my trade setups when it comes to the trend phase of the market. So we're going to go over here to the charts now, and I'm going to show you what I would have done. So first things first, I'm just going to go ahead and clear all of the charts, or not all of it, but a few things. So we're going to get rid of this, And that, well, might as well, whatever, clear the charts. So yesterday, or actually 2 days ago, what was seen coming into the opening, which today is Tuesday, Monday, this is what the market presented, right? So we closed Friday, a bullish candle, but as I said, we broke out of the current range. So this low of the range was broken, and it was sustained in the form of a break of structure. And I say break of structure because the candle here, it closed below. And on the following day, we broke lower and then we pulled back higher. But because we closed here, this generated inefficient pricing on the daily time frame from this candle's body open to that candle there. And so automatically, my bias, I don't care about anything that's happening to the bullish side. My bias is bearish. We've established that. So I'm only looking for bearish opportunities or shorts to play towards my liquidity targets that we decided were this low here at 306, and potentially if we were going to continue lower, depending on if we got a break of structure here, would be the next liquidity target, which would be that structural point here at 2115.75. So what ended up happening, how I found this 9-minute candle was based on identifying the inefficient pricing, and then this is how I refine my points of interest. This is bearish inefficient pricing. So because this is bearish, anything below 50% of this inefficient pricing, I don't care about, right? Because if I'm looking for sells or shorts, I want to be in the premium of that inefficient pricing. It doesn't make sense to sell in a discount. It only makes sense to sell in premium, and vice versa. If this was a bullish inefficient pricing, I would exclude anything in the premium side. Think of it in your mind as reversed, or actually, I'll show you this way so you don't have to think too much. I'll invert the scale and say that this is bullish inefficient pricing. Anything above 50%, I would exclude and only look for things in the discount to buy. Okay? Hope that was clear. So because of that, I'm only worried about everything that occurs. Whoa, that's odd. Oh, anything that occurs from here to 50% of that candle. So now when I transition from the macro perspective bias and point of interest, when I go to the micro perspective, I know that I'm only looking in this area for plays. I'm only looking in this area for sponsored candle and or inefficient pricing refined into a smaller area to increase precision for the trade. So on the daily, we got everything cool. So now we go down to the 4-hour. Now, this is where people get, a little confused on looking at more data. And this is why I stress looking at the higher time frames and marking up your points of interest from the higher time frame so you can exclude everything else outside of that. So yes, I clearly see that on the 4-hour time frame, you could consider this area from here. Here. Oh, no, that's not what I wanted to do. Whatever. From here to here as inefficient pricing. You could consider that. But as you can see, price almost tapped it, but it doesn't really matter because we're not playing off the 4-hour inefficient pricing. We're playing off the daily inefficient pricing, or the macro perspective inefficient pricing in this particular case. And we want to play that, and we already refined it to saying we don't care what happens anywhere up here. We only care about what happens inside of this green box, right? I don't know if that was crystal clear or not, but yeah, that's pretty much it. It was like we've already constrained where we're going to look at, pinpointing this point of interest, and now we just want to look and see if we can resolve any candle or inefficient pricing inside of that constrained area to find a play, right? And so now what we do is just keep scrolling down the time frame. So now we're looking at the micro perspective, and we want to see if we can make sense of anything. So immediately inside this green box on the 45-minute time frame, what stands out to me automatically is this inefficient pricing here from there to there was mitigated by this candle's wick here on the 45-minute. So that automatically stands out to me because it shows that there was some sort of play, there was some sort of impulse volume that entered the market that caused this. And then you see we had very bearish price action to go to the downside. And then the other indicator to me that this wick here is potentially my point of interest is the fact that we tried to come back up here with this green candle or these two green candles to mitigate that, but we failed to do so. And then we sparked price action to the downside. Then thirdly, the other thing is that the fact that, hey, we've generated all this bearish price action, and then on Friday, we ended up mitigating something here instead of continuing downward, which showed that there's intent to come back up here to mitigate something inside of this green box. And so now all I want to do is focus on this area. So I've refined my point of interest from that daily green box. Ooh, why did I do that? Okay. So now I want to refine it down to that wick specifically to see if that resolves into some sort of inefficient pricing or a sponsored candle. So I keep just going down the time frames. 30 minute, nothing. 20 minute, nothing. And, you know, some questions may arise like, well, if it's not showing on the 30 or 20, why would you keep looking at it? Like, obviously on the 20 minute, you see this candle. And it's like, that looks more like the candle of interest to me than, you know, whatever the hell you're looking at, Brendan. Well, we are basing it off of the current refinement from the 45 minute and how that price action occurred. I see that, and like I said before, once we constrain ourselves to a box or an area to identify our point of interest, we want to solely look at that box. And if nothing resolves, then we'll go back up to the top and do the analysis and go through the steps again to see if we have any other points of interest. And then we'll go through that process and resolve into those boxes. And if that outputs this specific candle, then I will choose that one. But I have the system set to where we start at the daily or the macro, micro, nano, entry, targets, good, right? So for right now, we're still focused on this box. And this is just the 20 minute. We want to see, like, does this resolve down to the 5 minute, the 1 minute, the 9 minute, right? We have all these time frames at our disposal to choose the specific candle that fits our narrative. So I'm just going to keep scrolling down the time frames and see, does that fit? So I'm going to go over here real quick so we don't have to worry about that too much. So go down to 10, 9, right? And so boom, just like that, we see that this 9 minute candle arises. But I'm not just going to go ahead and choose that candle. Yes, it's there. I want to see if it fits the criterion for a sponsor candle or inefficient pricing. So the first thing I want to see is some sort of, you know, mitigation of inefficient pricing or a previous sponsor candle. In this case, it was a part of that mitigation process of that 45 minute inefficient pricing shown here. And then I want to see uninterrupted bearish price action, bearish volume, bearish price run that breaks structure to the low side. And that to me will validate that as our source, our sponsored candle. And so what ends up happening here is we break structure here. We break the previous structural point, right? And that validates to me that, hey, we mitigated some form of liquidity over here. We broke structure uninterrupted here, and we have the candle of interest. So that to me fits all the criteria for a sponsored candle for inefficient pricing. That's my candle. Now, I can go see if I want to see if, like, hey, maybe this is too large of a candle for me. Can I see if I can resolve this on the lower time frames? But if nothing shows up, I already know that, hey, this already fits the characteristics of a sponsored candle. The body is larger than the wick, uninterrupted price action, broke structure, mitigated previous liquidity. I don't need to go any lower than this. And quite frankly, if I wanted to, if I don't need to refine this anymore, I can just wait for price to react off this and play the reaction in current time. But if I wanted to be aggressive, I would just take the trade off of this 9 minute candle. And so as you can see, what ends up happening, I'll play it out here, is price decided to, you know, go lower. That 700 point is the low of the range, and we end up, you know, doing all this price action, blah, 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 the shows. We failed to go lower. We failed to take out these 2 price points. And then we open up here. And then we end up doing more price action. And ultimately, just going to continue talking while this plays out, we drive higher, we tap the open of that sponsor candle perfectly, and then over the past 24 hours, 24 plus hours, we finally reached those targets that we identified in the previous video based off of the principles and rules of market structure. And now we're at current price, which is reacting from this liquidity point at the lowest point. So we broke structure for the first liquidity point. Cool. That's great. First target's met. Second target was met as well, but it seems currently that we have some sort of liquidity grab. Now, this is where for the outlook, we have to go back up to the higher time frame. We have to go back to the macro perspective and assess, hey, like, is this really the beginning of the bull price action, or is this just a pullback of the continuation of this bearish run? Are we just going to pull back here to this potential point of interest here, right? Or are we going to, in the afternoon here, are we going to continue dropping down, right? But we can't just make judgments based off of immediate reaction from this liquidity point, because all of this bearish price action is supported by short interest. And yes, they may have unloaded positions here, but just because they unload positions here and you see that it is a liquidity grab as of right now shown on the macro perspective, does not mean that, hey, we're going to immediately just continue skyrocketing. We have to get a little bit more data showing that, hey, inside of this this bearish run, and look, and if it's not clear on the daily, then we'll go to the 4 hour and see the trends or the trending market here and start seeing if we take out those 4 hour highs. And if we begin to take out those 4 hour highs, we show unwillingness to go lower, then we will see that this is a valid reversal, and we'll continue, and then now we'll begin the trend to the upside, or a bullish range could be created inside of this area. But as of right now, we're going to continue sticking to the bearish bias because everything is showing bearish intent. I'm not going to discount this liquidity grab as it currently stands based off the reaction from this liquidity point. But I'm not also going to go down here and say, oh, we got a liquidity grab, let me automatically, just go down to the, let's say, 5 minute time frame and see, oh yeah, this is great, right? We got a liquidity grab. We broke structure here. We broke structure here on the 5 minute. Oh yeah, this is great. We're now going to be, up and away, prices to the moon. We're bullish. No, that's not how that works. We have to, the markets are governed by the higher time frames, the macro perspective. You need to stick to the macro bias. Yes, the details of what's going on will be resolved on the lower time frames, or the micro and nano perspective, I like to call them, but you need to adhere to the macro perspective to understand how the price action occurs. Because right now, yes, we're getting, this would be a great trade. This is over 400 points off this liquidity grab. But let's say you are holding this potentially, hypothetically, and you're holding this thinking that it's going to continue higher, and then ultimately knowing that we're in a bearish bias, and you keep your stop loss where it is, your entry where it is, you don't move to break even, and price just runs straight through, continuing the bearish trend, and now you're left like, oh man, what happened? I thought we were bullish, but you were looking at it from the 5 minute perspective, not adhering to the daily perspective or the macro perspective, and seeing that, no, this was just a pullback. Yes, we got a liquidity grab, but this liquidity grab needs more information to be printed to justify and validate that we have reversed from a bearish to a bullish trending market now, right? So at this point, we have to kind of sit on our hands if we are looking for bullish plays, or we look for liquidity grabs like such here. This is consolidation. I would see this as potentially a liquidity run here of this previous high, and I would place something here to take out this low to continue the bearish bias. And now what I would do is, if this was to continue the bearish bias, and or wait, actually wait for mitigation of this potential bullish candle here, or I could use that as a continuation point, and saying that, hey, we ended up mitigating. Here, let me go back down, losing my words. Sorry guys, a little sick. Say we did come back down here and we are in a continuation, we have the point of interest, we see inefficient pricing. I would want to see, potentially, yes, we grab liquidity here. I would like to see price come up and mitigate this price void or this liquidity void here from the low of this candle, to the top of that candle, and see like, hey, are we going to fill that in? Or are we just going to do a liquidity grab of this previous candle here and then go lower? Or, looking at it from the 9-minute perspective right now, immediately what stands out to me would be, inefficient pricing fill here, and you see same thing. This green candle is printed, mitigate some form of liquidity, uninterrupted bearish price action. Price could easily come back up and, that's not what I wanted, and easily mitigate, this candle. Ooh. Right? I don't mean to bore you guys, but this is like the kind of thought process that you need, especially if you're going to use this system to frame up these trade setups, because it's not as simple as, oh yeah, we liquidity grab, broke structure immediately. Yeah, now we're shifting trend. You can't gauge a trend shift off of a 5-minute or a 1-minute break of structure. You have to fit everything, fold everything into the macro perspective bias. You can't just judge based off of the liquidity grab here that we're now completely going to run and take all-time highs. That's not how that works. You can anticipate it. Yes, I'm not going to say you can't do it, but it's extremely risky to do that without having the supporting evidence or information to make that play. So this is why you frame up the market, or I frame up the market how I do, in phases of saying we have a range phase, we have a run phase. Then we have our principles. We have the principles of structure, the principle of liquidity, the principles of time, and understanding that if these trades and if this system works the way it does, which it does, in confluence, everything will align, and then you get those high rewarding, low risk, high reward trade setups that I've posted and shown. Right? But yeah, that's pretty much it. So as of right now, though, for the outlook, I'm just going to sit on my hands, unless, some sort of opportunity arises here tomorrow, because I'm a little sick and I don't really want to play in the markets right now. But we'll see. Like I said before, current bias is still bearish. If price continues to run higher, I will look to see, potentially like, hey, we're running higher, but now I want to see, hey, do we pull back and do we fail to go lower and continue higher? And then I look for bullish price action, bullish plays. Or is this literally just, we grab liquidity? Yeah, there was some bullish positions here just below this liquidity point that were mitigated, and those positions are playing out, and we're just going to pull back here, mitigate, whatever, potentially that 9-minute SC there, balance that price or liquidity void inside of this green candle, and continue the trend downward. As of right now, I'm going to aid on the air of the bearish bias and go from there. All right. So long-winded video, lots of information jam-packed. Let's get this money. Peace.